Hi there, accountants. I hope all is well, and I pray that as you're viewing this video, that you're in the best of health and spirit. So this video will cover Chapter 3, setting up a new company, establishing a chart of accounts, beginning balances, customers, vendors, and products/services from QuickBooks Online Accounting 2025. So before we even get started, I just want to let you know QuickBooks Online is obviously a cloud-based platform and it's continually being improved. So some of the things that we see in the textbook, some of the visualizations are not going to necessarily match what you currently see in QuickBooks. But just keep in mind, what is the purpose of QuickBooks? QuickBooks is essentially a streamlined automation of manual accounting. So the key thing that I want you to take away is that even though some of the ways that you navigate certain things changes, the key thing is essentially understanding the basics of accounting and understanding what is happening behind the scenes. So I just want you to, just understand that some of the images might not necessarily match what you see, but again, you want to make sure that you understand the fundamentals of what is happening behind the scenes, and that requires a solidified understanding of the accounting basics. So upon completion of this chapter, the student will be able to do the following: log into your account, change company settings. This is going to be something that you'll see that it won't allow you to change. So we'll see that in a few. Modify the chart of accounts, establish beginning balances, and create new customers, vendors, products, and services. Close the opening balance equity and create and print a balance sheet. And we'll also be able to create, print, and export a transaction detail by account report. So we began this process in Chapter 2. When we created our account, you should have received an email that states your instructor has invited you. You accept the invitation. And from there, you provide basic information about Wild Water Sports Company, including the company name, address, industry, type, etc. Now we're going to revisit the Wild Water Sports Company that we worked on in Chapter 2. And each of the following chapters are going to work in the same way. So keep in mind, chapters 3 through 10 is going to be focused on wild water sports, and the end of chapter case assignments that's assigned by the instructor, that is basically going to be a reinforcement of what you've learned in the chapter. So in order to begin, you're going to navigate your browser to Wild Water Sports Company. The text is going to demonstrate how to do certain tasks, such as modifying defaults, adding new accounts, adding new transactions, etc. And these demonstrations, as mentioned, they are going to occur in the Wild Water Sports Company. Each section of every chapter is going to begin with a demonstration using Wild Water Sports. And then again, it's going to be reinforced by completing an end of chapter case where you use the second company. And in the case, you're going to be asked to perform tasks that are similar to those demonstrated in the Wild Water Sports Company, but now obviously in the second company. And the tasks you accomplish in Wild Water Sports, in the case, they're permanent. So when we looked at the sample company, Craig's Design Landscaping, that essentially was a sample company. So no changes that you make are going to be saved. You are working in an actual QuickBooks file. So therefore, any changes that you make, they're going to automatically save. QuickBooks Online is a cloud-based program, so therefore anything you do automatically saves. After you make the changes to Wild Water Sports Company in each chapter, obviously it's going to be critical to verify your work because you want to make sure that you're doing it the right way. So in order to confirm that you are completing the steps correctly, at the end of each chapter, the trial balance is going to be given, and you can look at it account by account to make sure that the account balances are correct, and also to make sure that your total debits and credits are correct. So this essentially helps you to be able to understand the steps and make sure that they are done correctly. All right, so we're going to get started. So this is the first thing that I wanted to point out with the company settings. So here it's saying your first task is going to be to update the Wild Water Sports Company settings. To modify the Wild Water Company sports settings, you do the following. So open the internet browser. I already have my QuickBooks Company open. It's going to ask you to type, or you can even just click on the link and then it'll take you directly to QuickBooks. You'll log in using your username, which is your college email address, and the password. And then if you're using your own personal computer, sometimes, it'll ask you for the information, sign in. And in the event that, let's say you already have a QuickBooks or an Intuit account, then you would use a different ID. But again, the key thing is you want to use your college, your university address, and then you click on Wild Water Sports. So here it's going to ask you from the Wild Water Sports Company homepage, click the gear icon. So as we know, the gear icon is in the top right. And then here it's going to ask us to click on account and settings. So if we look on the left side, based on a textbook, it shows us that there is a pencil that you can choose to edit. So they've made updates to the version of QuickBooks. So therefore, you're not allowed to make any updates to this. So what I would strongly suggest is when you are updating the information for the client, that you input the information at the beginning. So as you're starting with chapter 2, it'll let you know that it is a C corporation. The company address would be given, and then here it's asking for the industry. You would select all other miscellaneous store retailers. You'll save it, and then it'll also give you the opportunity to input the EIN number. But again, there's been an update into the interface of the program, and you cannot directly make the updates here. But just keep in mind, this has no impact ultimately on the trial balance, the financial statements. This is just more so, for tax purposes, more so for like the settings of the company. But as far as essentially recording the transactions, it has no impact. So in the event that yours does allow you to modify the company settings, great. If it doesn't, it's totally fine. You can just bypass this, or when you set up the company, you can just make sure that this information is there. But the main thing is that the company name is there, so you're good to go. The tax form, C Corporation, Form 1120 is there, and then the company address. So again, if you cannot update the industry text box and you cannot update the EIN, it is totally fine. Just keep pushing. All right, so here it's asking us to modify the chart of accounts and to establish the beginning balances. So here you'll see there's a video link, and it asks you to navigate your browser to the video tutorials that are provided by Intuit. See the website address is specified in the preface. So if you click on that, it will take you to the site for Intuit, where it shows you some video tutorials of how to do certain things in the program. And then you can search how to set up chart of accounts. You can also use the help button here, and then you can type in, how to set up chart of accounts, and it'll take you somewhere. So the help tool is very useful. So how to set up chart of accounts. So anything that you're struggling with as you go through the program, you can use the help desk, and here, it'll take you directly to the chart of accounts. So just keep that in mind. Take advantage of the help option. It states, we'll continue to use our Wild Water Sports Company, referred to as WWS, in the future. So just keep that in mind. To learn the process of creating, modifying, and deleting accounts and establishing beginning balances. So if considering, we're continuing from above, I already have mine open. So therefore, I don't need to open the file again. It's already open. But it's saying if not, if you already closed the company, then you will need to reopen the Wild Water Sports Company. In the event that you leave and you return, everything that you modified is going to be saved automatically, because again, QuickBooks Online is a online company, so it automatically saves. So here it states, creating accounts and related beginning balances, they only occur when we're utilizing QuickBooks Online for the first time and the business has been in operation for some time. So in such case, by making this transition to QuickBooks Online from a previous accounting system, maybe the person used Wave, or maybe they had a manual accounting system. So in such case, they are going to need to utilize the option to create specific accounts with beginning balances to make sure that any amounts tracked previously are going to be input and accounted for in QuickBooks. So here it says, in this section, you're going to be adding new checking, inventory, prepaid rent, long-term debt, and common stock accounts to the Wild Water Sports Company. You'll also be establishing beginning balances for the checking, accounts receivable, prepaid rent, inventory, and accounts payable. So keep in mind, every time you add a beginning balance, as we know, one thing about journal entries, one thing about accounting, everything needs to be in balance. So our total debits and our total credits must tie. And every time we record a journal entry, it is going to be either debited or credited, depending obviously on, which beginning balance we're putting in place. And we're going to use this opening balance equity account, which is reflected on the balance sheet. So QuickBooks Online is going to let you establish a beginning amount for all of these accounts using basic journal entries. So this is why I mentioned earlier, even though some things, in the textbook is going to look a little different, The key thing, it all boils down to understanding the fundamentals of bookkeeping, the fundamentals of accounting, because if you are a master at navigating QuickBooks, but you don't have a solidified understanding of the accounting basics, garbage goes into the program, garbage is going to come out of the program. All right, so just keep that in mind. So here it states we will do that for some accounts, such as accounts receivable, which is an asset. This basically represents that the company provided products or services to a customer or another business on account, and they did not pay as yet. Accounts payable, this is essentially where the individual, or the company rather, has an obligation either to an individual or to maybe a business, and in such case they are going to need to pay back. So they have an obligation. And keep in mind, the obligation is not always just to a business. Sometimes it's also to a customer, right? So you might say, wait, how? That doesn't make sense. In the event that a customer pays you in advance, you didn't earn the money, right? So if we think of like a magazine subscription or car insurance or any type of insurance, sometimes they are paid in advance. So in such case, what essentially happens is that the company did not earn the money as yet. What happens is when they provide the individual or the business with the service or the product, then they earn the money. So whenever we add a new account, the account type is going to need to be specified. So we need to confirm, is this an asset account, right? Is it a bank? Is it accounts receivable? Is it other current asset, fixed asset? Is it a liability? Is it an accounts payable? Is it a credit card? Is it a current liability? What that simply means is it the liability going to be due within a year or less? Or is it a long-term liability? Is it going to be due over a period of time that is longer than a year? Equity, as we know, is its own account type. We also have income, which is often referred to as revenue. And then we have expense accounts, cost of goods sold, expenses, basically any costs that the company incurs in order to generate revenue. So key thing, each account, they're going to be assigned rather one of these account types. Why is this important? Right? Because the different accounts, they impact different financial statements. And if you categorize an account incorrectly, then the financial statements are also going to be incorrect. So this is going to dictate again where the accounts are going to appear in the reports, especially the income statement, balance sheet, and the statement of cash flows. And the detailed type is going to further define where the account is going to appear under its account type. So examples of bank account detail types include, is it cash on hand? Is it a checking account, money marketing, savings account? So to begin, we're going to add a new checking account with a beginning balance of $25,000. So here we click the gear icon, and as mentioned, there's more than one way to navigate in QuickBooks. So we can click on the gear icon. We can click on chart of accounts. Computer's moving a little slow, but it's going to eventually get us there, right? So that's one option to get to the chart of accounts. Another option would be to open a dashboard. And then if we go to transactions, we can also click on chart of accounts. We can search it using the magnifying glass, so chart of accounts, and then it'll help us jump to the chart of accounts. So again, there's more than one way to do things in QuickBooks Online. So as you play around with the system or the platform rather, and you become more familiarized with it, you'll see that there's more than one way to do the same thing. But we already in the chart of accounts. So here we're going to click on new in the upper right corner, as we see here. And then here again is mentioned, some things look a little different. What we see in this figure is not necessarily what we see on the right side, but it is the same logic. We are basically adding an account. So in this case, the account name is going to be checking. So how do we know that? We see here account name. We input checking. And then for the account type, this is going to be a bank account. Here it says bank account, or, banks, same thing. The detail type, it's not cash on hand. This is a checking account. Here it says tax form section. Here it says detail type. Pretty much the same thing, right? So now it's essentially asking us to track the balance. So if we scroll down, the opening balance is $25,000, and it gives us as of, so it's going to be as of 12/31/2026. And it's basically stating that they're going to start tracking the account as of 12/30/2026. Perfect. So we save it. You can select save. And then now we'll see that this checking account here, it's going to show in the chart of accounts. And now there's, this new great feature in QuickBooks Online where it shows you exactly where each account is going to appear, or which financial statement rather it is going to appear. So here we see our assets, our liabilities, and our owner's equity accounts. These essentially appear on the balance sheet, and our revenue and expense accounts, these appear on the profit and loss statement. So we've saved it. We've added the new account, the checking account. So here it says, so far we've added $25,000 to the assets of Wild Water Sports as of December 31st, 2026. And then we also see that there was an increase to our opening balance equity. So as we see, we had an increase to our checking account, and it was offset by our opening balance equity. So to continue, it's asking us to add a new product. In QuickBooks Online, products are basically merchandise that a company purchased from a vendor. They maintain it in inventory and then they sell it to customers. So it's basically products purchased for resale. So services are efforts made by a company to add value to a customer. And in Wild Water Sports, there is an inventory account that exists. And if we create a new company, inventory might not exist, right? So again, it really all depends on a company. Some companies sell products, some companies provide services, and some companies provide both. So here it states, when you add a new product, a new inventory account called inventory asset is going to automatically be created. And again, this is just a reminder that there are video links available to help you navigate the software. So here it's saying to add a new product and service, do the following. So we view the chart of accounts and note the inventory account. So if we scroll up, inventory we know is an asset. And we see here that our inventory asset account is 0. So what we do, we go to our gear icon, we click products and services. And again, that's just one way to access it. We can go to our dashboard. We can go to sales, products and services. Again, we could also type it in the search bar, more than one way to navigate things. So here we select, here it says add an item. We basically create an item, same thing. So we select, this is an inventory item. So item type, it's an inventory item. And the name of the item is the Malibu Sunset LX. So we start typing it in, Malibu Sunset LX. The SKU, we don't need to worry about that, but that's basically just like an identifying number for the specific asset. For the category, in such case, we have to add new. So this is going to be boats. And then we select save. And then in such cases, asking us, what's the initial quantity on hand? And the initial quantity on hand in this case is going to be 1. The as of date says 12/31/2026. And then we select inventory as the inventory asset account. So here we see, inventory asset, and we'll just keep it as that for now. If we need to make a change, I'll let you know, but inventory asset should be fine. So if you already have the inventory asset account, then I would suggest just keeping it as inventory asset. There's no need to create another one. But if you don't have inventory, then you will be adding a new account. So we selected the inventory as the inventory asset account. Next, we select Malibu Sunset LX in the description and purchasing. So here we see purchase description, Malibu Sunset X. So we input it again. And then here we see the price, and put it here for the sales, Malibu Sunset LX. All right, and the price, how much we're selling it for, is $60,000, and the cost of the item is $48,000. And then here we see for sales, it's asking us to, update the income account. It says select sales is the income account. So we'll update it to sales. And then for the purchasing, the expense account is going to be cost of goods sold. It's already there, so we are good to go. And then here, it's asking us to accept the taxable standard rate. All right, so that's not set up yet, but we'll see. So We accept the taxable standard rate from the sales tax section. So again, some things that we see is not going to, show the same thing. And I believe when we first set up the company, it asks us to go to Appendix A and to set up the sales tax. So we'll make sure that that is sorted once we get to that section. So we accept the taxable standard rate, but again, it's not showing here. It's somewhere else. We type Malibu Boats in the preferred vendor. It's not here. So we add it. So we add the name of the company, Malibu Boats. And then there, the vendor name is also Malibu Boats. We select save. And then we're good to go from there. So now we want to create a new one. So save and new. And we create a new one. In the sales and product services, we click new. We did that. And then now we're going to be adding a service item. So the type of service item says here is engine service. And then here it's asking us to check the I sell this product service to my customer. So that would be in the sales section. And this is already ticked off. And then it wants us to uncheck the I purchase this service from a vendor. So we're going to uncheck that. And then we already typed in engine services up above. We're going to type it again here. So we type in engine service. All right. And then here it's going to ask us to input the price. So the price is $250. And then it's asking us to click the gear icon to click the chart of accounts and then create new. So in this case, we have the services already. So here, what it wants us to do is basically click the gear icon, then click on chart of accounts, then click income. And then it wants us to create an account for service revenue. So there's more than one way in which we can do this. I mean, there's already a service account, so you can just leave it as is. Or what you can essentially do is it allows you to add one right here, and then you can type in the account name, service revenue, right? But because there's already a service account here, I'm just going to leave it as is. But again, as you are working on this for the first time, there's not going to be any service account. So what you can do, you don't even need to, close out of it to go back to the chart of accounts. They've made an update whereby you can simply just add the brand new account right here. So it makes it easy for you. So in such case, I already have the service account. I'm going to leave it as such. So what I would do is save and close. So here is saying it wants us to return to our recently created service item by clicking gear. I'm already here. I already see it. So what we can simply do, again, this is basically if we wanted to create that service revenue account. So what I could, even possibly do is, let's say I go to my chart of accounts, and what I would do is update the service account. And I would change this. I would edit it from saying services to service revenue. So that way it ties. All right. So we are pretty much good to go with that one. And then here it's asking for us to edit the sales tax. So if I go back to my products and services, here we see, all right, that this is non-taxable. So here with the sales tax section, it's not necessarily showing us here. Let's see. All right, so as mentioned, QuickBooks is always changing. All right, so all right, we're good to go from there. So the services, generally, it'll be here and it'll show us if sales tax is associated with it, but it is not showing us here. So we're pretty much good to go. So the services is not going to be. And then what I'm pretty sure QuickBooks has done, generally they know that services for the most part are not considered taxable. So we're good to go from there as it relates to the service. I'm just double checking to see if there's any update in this section. All right, so we'll go from there. Save and close. So now here it's asking us to click the gear icon and then the chart of accounts. So it wants us to note that there's a new balance in the inventory account of $48,000. So we go to our chart of accounts. And then here it wants us again to show a balance of $48,000. And how did we get that? There's no journal entry we needed to record. If we view the register, we see here that the Malibu Sunset, we just, created the product, and for the Malibu Sunset, there was an increase of $48,000. So here it's saying, following the instructions for adding a new product above, create a new product, name, description, and purchasing information is down below. So again, it shows you how to do it step by step. And then it's basically saying, hey, I just showed you what to do. Now you do it on your own, right? Pretty much just like when you are at a job, they teach you how to do it, and they expect that eventually you're going to be able to do it on your own. So we go back to sales, we go to products and services, we select new, and we have a inventory item. The name of the item is the Malibu Sportster LX. So Malibu Sportster LX. And this is an inventory item. And you know that this is a part of our boats. So the inventory item, it lets us know that the initial quantity on hand is 3. And this is as of 12/31/2026. It's under the inventory asset account. And then as it relates to our sales, here we know that we're going to be selling it for $52,000. So 52,000. And then we make the update here, Malibu Sportster LX. And this is going to be recorded under sales. And then purchasing, same thing, Malibu Sportster LX, and the purchase cost is $41,600, and then it should be under cost of goods sold, and the preferred vendor is Malibu Boats. All right, so we add this, make sure everything ties. So we select save and new. And here it's telling us, following the instructions for adding this new service above, it wants us to create a new service. So we create a new service, and the name of the service is diagnostic service. So diagnostic service. The income account is going to be service revenue. So we sell this service to our customers. We do not purchase it from a vendor. So we update it, diagnostic service. And then the price rate is going to be $500. And our income count for service revenue is already there. So we're basically good to go. So we select save and close. And then now it wants us to, view our updated chart of accounts. So again, you can select the gear icon, go to chart of accounts. You can go to your dashboard and go to transactions, chart of accounts. Or you can type it in using the magnifying glass. Again, key thing, there's more than one way to navigate QuickBooks Online. So it's asking us to view the updated chart of accounts. So once we view it, we see that there's an update of $25,000 to the checking account. And there's a new inventory account balance, as we see, of $172,800. So wait, what? How did we get there? We have the Malibu Sportster LX. We know that we have 3 on hand. And then for the Malibu Sunset LX, we have 1 on hand. So now if we scroll back to the chart of accounts, and then we scroll down to our opening balance equity, we see that there's an opening balance equity amount of $197,800. So now it's asking us to continue and to add opening balances to the prepaid expenses, long-term business loans, and common stock accounts. So we continue in the chart of accounts, and we select view register in the action column for the long-term business loans account. So when we scroll down, we go to our liabilities, and it wants us to go to long-term business loans account. So here we are, long-term business loans. We select view register, and then it's asking us to add a journal entry. So we select add journal entry. We choose the date 12/31/2026. And we type 1 as the reference number. So what we can do, we type 1 in the reference number. It's already there. The name of the payee is going to be Chase Bank. So we add new. So we have Chase Bank. We select save. All right, we're supposed to change the vendor. I'll double check that. All right. And one tip rather is that when you're using QuickBooks Online, and let's say you need to change something, you can always, update it. So let's see, we added the vendor, Chase Bank, so customer, and what I'm going to do is edit this. So edit it instead of it being, is there a way to change it? Let's see. All right, so just checking to see if there's a way to update it to a vendor. It doesn't give us the option to choose vendor. It just says customer. Okay, no qualms, doesn't change anything. All right, so we're good to go. So we've already added them. We go back to that journal entry. So I am going to go back to my chart of accounts. All right, go back to the long-term business loans. Long-term. Oh, another thing that you can do, instead of scrolling like I just did, you can filter it. So if we select long-term, right, it's going to filter out all of the accounts that has long, and it just makes it a little easier. So here we are back where we left off, and then we're going to be adding that entry. We already have Chase Bank added, and then from there we're going to select the opening balance equity account. So opening balance equity, and we're going to type $50,000 in the increase section. So 50,000, and then we're going to select tab, and then we simply select save. All right, now if we go back to the chart of accounts and we view register in the action on the prepaid expense account. So again, you can scroll down, or you can simply type in the name of the account to find it faster. So here we have prepaid expense. We go to the register, and then from there, we're going to add a deposit. And then from there, we're going to type in the date 12/31/2026. And then the payee in this case is going to be Allstate Insurance. So we add new Allstate Insurance. And then from there we select save. And then we're going to choose opening balance equity. And then we're going to type $15,000 in the increase section. So here's something to keep in mind. When we were just working on the previous example, the increase was on the left and the decrease was on the right. In such cases, a little different. So you want to make sure that you are looking to see, where the decrease or increase is showing. And again, this goes right back to the fundamentals of accounting. So we select save. Then we go back to the chart of accounts. And now we just finished for the long-term business loans, and we finished for prepaid expense. Now we're going to look for common stock, and we see common stock here. We select view register. We're going to add a journal entry. And in such case, we update the date to 12/31/2026. We type 2 in the reference number column. 2 is already there, so we're good to go. As far as the payee, it is going to be shareholders, so we update that. We select save. And then we're going to do the same thing. We use the opening balance equity account. And we type $1,000 in the increased section. We select tab. And now we save. And now it's asking us to go back to our navigation bar rather. Here we are. We select reports. And then it wants us to go to our trial balance. So what we do, we go to our standard reports after we select reports. And then we select trial balance, or we input rather to search for the trial balance. And then another thing you can do is basically, scroll down, and then you can find the trial balance in For My Accountant. But again, just to make it easier, you can type it in. So we go to our trial balance, and then we are going to select custom from the report period. So generally it'll always pop up as this month to date, but we are going to select custom. And then we are going to type January 1st, so 01/01/2027 to 01/01/2026. 27. And then we're going to keep it on accrual method. We're going to run the report. And based on the report that we see, here it should be checking account needs to have a balance of 25,000. The inventory asset account should have a balance of 172,800. Our prepaid expenses should have a balance of 15,000. So there's 3 debited accounts, checking, inventory, and prepaid assets, for a total of 212,800. And for the credit, we see long-term business loans, a credit of 50,000, common stock of 1,000, and the opening balance equity of 161,800. So we're good to go on this one. What we're going to do is save the customization. And then here it's saying, now we're going to set up beginning balances in accounts receivable and accounts payable. We're going to use journal entries. We're going to add a new customer and vendor at the same time. And journal entries, as we know, because QuickBooks Online, if you create an invoice, it's automatically going to do some things behind the scene. But if we were preparing manual journal entries, when we issue the invoice, that basically means that the customer owes us money. So what do we do with the manual journal entry? We debit accounts receivable because we are expecting to receive money from the customer, and we credit sales or service revenue because we've earned the income. QuickBooks, on the other hand, what we simply do is create the invoice, and then it does the accounting behind the scenes. So this is why I will continue to reinforce that it is extremely important to make sure that you understand the fundamentals of bookkeeping. So here we see it's asking us to create accounts receivable and accounts payable balance. So we open our navigation bar, we select plus new, and then we'll click on journal entry under other. And then we're going to type in our date, 12/31/2026, in the date box. And here it's going to ask us to select accounts receivable as the first account. So we select accounts receivable, and the amount is going to be 70,000. So our customers owe us a lot, right? We're going to input the name of the client. So we have Refugio. All right. And here we see the name isn't there. So it's asking us to add new Refugio. So we add it. We select save. And then we are going to credit accounts payable. Well, in this case, we owe the customer a lot. And then we're going to credit it for 56,000. And then we're going to credit our opening balance equity for 14,000. We are going to type Malibu Boats. All right. So there's a lot of things going on here. So we have customers that owe us. The company, Wild Water Sports, also owes. And then we have the difference, which is our opening balance equity. So in such case, this is what our journal entry should look like. Debit to accounts receivable, credit to accounts payable, and a credit to the opening balance equity. So we select save and close. And if we go back to our trial balance, and again, once you save the report, you can click on custom reports so it's easily accessible. So we click on the trial balance, and then here we see now our balance increased. So here we have checking account, accounts receivable, inventory, and prepaid expenses. So now there's a total of 4 debited accounts for a total of 282,800. And then we have accounts payable now being reflected, and we still have our long-term business loans, our common stock, and our opening balance equity. So again, so far we've created the checking account, accounts receivable, inventory. So this is for a company that was already in operations, and now we are transitioning to QuickBooks Online. So now it's asking us to create equipment, original cost, and accumulated depreciation accounts. So we go to the gear icon. Main thing is they want to get us back to the chart of accounts. So we go to chart of accounts. We click new. We select assets as the account type. And it wants us to select fixed asset. All right. And then from there, it's asking us to select fixed asset, other tools and equipment. So we click on that and we type equipment in the account name box. So equipment. and then we select save to save this account. Then from there, we go to the chart of accounts, we select new, and we go to assets. So this is going to be an asset, the account type. So this would be our fixed asset. And then we're going to choose equipment. All right, so let's see, accounts receivable, the current asset, equipment. Let's see where this is. Give me a second. Yeah, so it'll be fixed asset. Trying to see if it shows anything different. Yeah, nope. So as mentioned, sometimes things are a little different, but so fixed, what is it? Select equipment. All right, fixed assets. Another tools. All right, I'm trying to understand the difference between this. So select assets. Oh, okay, here we are. All right, so it wants us to create an original account or original cost for the equipment. So the first thing you're going to do is create the equipment. And then the next thing we're going to do is to create an original cost account for the asset. So we have fixed assets and we have fixed asset. So we're going to click the starting date in the opening balance. So we're going to update it 12/31/2026. And then here we see the opening balance is $40,000. And then what we are going to do is make this a sub account. So the parent account for this is going to be equipment. So we save. And then if we update it here, we're going to see that if we look to the chart of accounts, we have the equipment account and then we have the original cost, which is a sub account. And then now we're going to select new. And then the account name in this case is going to be accumulated depreciation. So our account type is fixed asset. And then we have accumulated depreciation. And the name of the account will be accumulated depreciation. Depreciation. All right, 1R. All right, and this is also going to be a sub account of equipment. And then here it's letting us know that there's a beginning balance of $10,000. So $10,000 as of 12/31/2026. And then we select save. And then we are pretty much good to go. So again, if we scroll down here, we're going to see we have the equipment account, which is the, header account, the parent account. And then we have an account for the original cost. They originally paid $40,000 for the equipment and they claimed depreciation of $10,000. So the book value of the equipment is $30,000. So now here's asking us to do the final step in establishing the beginning balances is QuickBooks Online is to close out the opening balance equity account as of January 1st, 2027. So it states, as we established a common stock account, the only account left in a corporation's equity accounts is retained earning. And retained earnings, that basically represents any earnings, any net income, and any net losses from prior years less dividends. So we're going to need to create a trial balance, and it's going to list the debit or credit balance in all accounts as of a specific date. So here we see in order to close the opening balance equity and create, we're going to click on our navigation bar, select new. We're going to click on journal entry under other. We already have our date, 12/31/2026. So we are going to select opening balance equity. This account is going to be debited. So opening balance equity, we're going to debit the account for $205,800. And then from there, the next step is going to be credit retained earnings. So we credit retained earnings for the same amount, $205,800. So we see the journal entry on it in the textbook is the same as what you see on the screen. And again, one key thing to keep in mind is that because we are dealing with a C corporation, retained earnings is going to be used. If we were working with a sole proprietorship, we would use owner's equity. Same thing. It's just that when we are using, different business structures, the wording, the verbiage is a little different, but it's basically the same thing that's happening. So we just created that journal entry. We select save and close. And now we go back to our reports. We go to our standard reports. And then our favorites shows us accounts receivable, aging summary, balance sheet, profit and loss. This is already here. But for whatever reason, let's say it isn't there, you can just type it, balance sheet. All right. So here we have the balance sheet. And then we're going to change it to custom. So it'll automatically show us last month, but we will select custom. And then we're going to change it to January 1st, 2027. January 1st, 2027. We run the report. And then now here we're seeing, based on this, that our total assets should be 312,800. So this is a little distorted. We'll see if we can make this a little bigger. All right, so here we see checking is 25,000, accounts receivable 70,000. We have inventory of 172,800, prepaid expenses of 15,000, and then we have the asset that we added. We have the original cost of 40,000 and a depreciation of 10,000, which is netted for 30,000. So our total assets are 312,800. And then as we know, assets equals liabilities plus owner's equity. So our assets are 312,800. When we compare it to our accounts payable of 56,000, long-term business loans of 50,000, we have common stock and our retained earnings. We have, total liabilities and equities that time. So here it's asking, to click the printer icon. These are just some things you can do. You can print it. You have the option to email it to the client, to save it as a PDF, and to physically print it. So these are some things that you can do. You can choose to keep it as portrait. You can choose to make it landscape, right? Some different strokes for different folks. You can have smart breaks, or you can choose to not have smart breaks. You can repeat the page header. You can choose not to repeat the page header, right? So it ultimately all depends on your preference. These are some things that you can, update. And then here what it's asking us to do is to save the customized report. So that way, when we go to our reports, we just select custom reports. And when we click on it, the date range will already be saved essentially. So in such case, we select save. We knocked it out already. We go back to the balance sheet. It's showing you, to export it. So other than printing it, we can also export it. So we can export it to an Excel. We can also export it to a PDF, and we can add it to management reports. So once we do that, we save. We go back to, the file, and then you can view the Excel pretty much to make sure everything ties. So the work that we've completed in this chapter, it had an impact on our company's trial balance. So before, we didn't have a checking account, and we created a checking account for the 25,000. Before, we didn't have long-term business loans. There was nothing in our inventory, nothing reflected in common stock. But through the various methods, through us adding new accounts, through journal entries, through making a deposit, we have impacted, and as it lets us know here, influence the company's trial balance. So what we do, we go back to our reports, we go to our trial balance, and this is how we know that everything was done correctly. So once we look here, we see as of January 1st, 2027, we have, the checking account, which shows us the amount. We have the accounts receivable, inventory, prepaid expenses. We have the accumulated depreciation. We have the equipment original cost. So every time you make it to the end of the chapter, I would implore you, do not move on to the next chapter if your trial balance is not correct. So if your trial balance is not correct and doesn't match what's in the book, that basically means that you did something wrong, all right? And it needs to be fixed. So in this case, all of my account balances tie and my total debits and credits tie. So now if I scroll down, this is basically just telling you, how to create the trial balance. I mean, we already did it. We've already saved it to our custom reports, and that's how I accessed it. Custom reports, trial balance. I verified that the numbers were good to go. And then again, as mentioned, if there are any differences, we have to, fix it to make sure it's correct. So in the event that there are differences, you want to do what's called create a transaction detail by account report. Because again, if it's messed up and you continue to build on it, it's going to be wrong. So often you'll want to investigate a detailed list of transactions that have been recorded for a specific period. In the end of chapter cases, an usual explanation for an incorrect report is recording a transaction in the incorrect period. So sometimes, maybe the wrong date was used or something of that nature, or maybe an account that should have been debited was credited. So there could be a number of things. In order to explore this option, we would do what's called create a transaction detail by account report for a specific period. And we can create this account for a large period to see if transactions were recorded in a proper period and to see where maybe we entered a wrong amount or maybe a wrong account. So in order to create, print, and export this transaction detail, we do the following. So we'll go to reports from our navigation bar. Since we're already in the reports, I could just select back to custom reports and go to standard, same thing, right? So we go to reports and then we type transaction. All right, so we have transaction detail by account. We click on that. And then this is the, the new version. But what we want to do, if we want to, view it in the normal view, see how click it. There we go. So it asks us to switch to classic. So we switch to classic view. All right. And then now we scroll to the top of the report and we select custom. We change the period. And we want to change it from January 1st, 2020 to December 31st, 2030. All right. So 12/31/30. And then we run the report. And then as we run the report, it basically shows us everything, right? So it shows us the journal entry for the deposit for the checking account, journal entry number 3 for accounts receivable. So again, we factor in all of these different things, and that is what ultimately lets us know that we recorded the transactions correctly. Because if you just look at the transaction details for the month, it's only going to show you for transactions for the month. But here we have a span of about 30 years. It shows us all of the transactions for the past 30 years. So for the prepaid expenses, it's asking us to click the deposit in the prepaid expenses section. So we click deposit. And in here, again, you have the opportunity to click on them. They're like a hyperlink, and it takes you directly to the transaction that created this specific entry within the register of the account. So we leave the transaction detail by account as the custom report. Then we can basically just select save. And then we click the print button, because if we want to save this, we can basically, save it as a custom report. So we can just do that, save as a custom report. And then we're pretty much good to go. So we cancel. Now here it's saying, under the account icon, which is the top right, if your name starts with an S, it would show an S. If your name starts with an A, show an A. So you click on that, and then you can sign out. But this brings us to the end of chapter 3. So in this chapter, using Wild Water Sports Company, we've modified the company settings. We've added new accounts to the chart of accounts. We've also added beginning balances where appropriate. We've added customers, vendors, products, and services, and we closed the opening balance equity account. So with that being said, we're now ready to add operating activities like sales receipts. We provided a service or sold a product to a customer and they paid us right away. So we create a sales receipt. Or maybe we provided a product, or we sold a product and provided services to a customer. They didn't pay us right away. In such case, we would use an invoice. Same thing for cash receipts, right? They essentially paid us right away once we performed the services. So as mentioned, as we go through chapter 3 and the rest of the chapters, there's going to be some nuances, some differences between the depictions that you see in the textbook and what you see in QuickBooks. But the key thing is also, of course, it's important to know how to navigate QuickBooks, but the key thing is you need to understand the fundamentals of accounting, and that is going to ensure that as you are learning QuickBooks Online, that you can utilize the software in the proper way. So again, this brings us to the end of chapter 3 for QuickBooks Online Accounting 2025.